Good evening, everybody. This is Andy Pedraza with Special Effects Academy on the start of the week session for the Forex Trading Room on February 10th of 2019, our Forex Weekly Outlook. Going to take a look at the week that just ended and the week that is just starting. As usual, we will have our standard agenda, a look at the prior week, our currency strength meter, fundamental announcements, analysis of the major pairs on the daily charts, any setups in progress that we're seeing as the week kicks off, and a few parting words. You'll have opportunity for a Q&A at the end if there are any questions. That said, we are going to start with our results for the prior week on the long-term ledger. We had some very good trades closed at profit this last week. About, I don't have the exact number in front of me, but about 400 pips net profit was taken out of the open trades. We're still in a number of trades as we speak, though the market open about an hour ago had some very choppy waters coming through. In particular, the Swiss pairs seem to have jumped up by about 150 pips and then crashed back down within minutes. So that did take us out of at least one trade that was still open when we prepared this deck. And I think actually two trades, with the Euro Swiss being the other one. The USD Swiss was very near our stop loss anyway, so that did kick it off, and we're out of that trade. And I'll probably be getting in on a short-term trade on the USD Swiss in the same original direction. It looks like whatever happened in the market is over, but I'll leave that for later. For now, these are the results. Trades closed last week, as I said, about 400 pips net profit on the long-term account. And on the short-term account, we did not place any trades for the week, so that's just a blank ledger. Notes and opportunities for improvement. Pound volatility was very high last week as I went back and forth with Brexit, either good news, bad news, but it seemed to go in both directions at times. Also, the interest rate decision out of the Bank of England helped out. We did take quite a lot of profit out of the pound last week, so that was one half of the very good trades that we had. The other half was provided by the CAD. We had some nice volatility coming out of the CAD as well as oil prices continue to go up and down. So we did catch some of these on the right side of the trades, and we entered some towards the end of the week that are still open and at profit. So as mentioned before, multiple trades closed on the long-term account for upwards of 400 pips net profit. Still have multiple trades open. Some of them are at profit, some at loss. Actually, the majority at this point are at profit, but we will take those into review when we start the actual trading week tomorrow evening. And no short-term trades taken this week that just ended, which means, of course, no open trades carried over through the weekend on the short term. Let's take a look at the relative strength meter for this week as well as the prior 30 days. On the left side of the screen, you'll see the prior 30 days chart, and we can see some clear winners and losers here. The Aussie in particular started off the year quite poorly after doing a little bit of a recovery towards the end of last year. So we're now back into the Aussie losing ground. The CAD was pretty middle of the pack. It lost ground against the pound and the dollar, but gained ground against most of the other currencies as oil prices helped shore up the Canadian dollar. The Swiss was and remains the clear loser in the last 30 days. It's definitely lost ground to everybody. The euro was middle of the pack as well. The pound, curiously enough, has been having a rather good 30 days. It has gained ground against everybody except the bullion, gold and silver. However, this last week or two has seen the pound starting to fray. So even though the last 30 days have been positive for the pound, we can see that turning around in the last week or two. The yen has also been middle of the pack on the 30 100-day chart. The Kiwi, much like the Aussie, has lost ground against almost everybody except the Aussie and the Swiss. So both Australia and New Zealand have had a very poor start of the year, coming out of a particularly bad year. There have been some recovery on both, but that has failed in the last week or two. US dollar has been gaining ground against everybody except the pound over the last 30 days, and I would expect the pound to slide underneath the dollar as well if the trend continues the way it's been behaving. Clear winners have been bullion, silver, and gold have both outperformed everybody else except themselves, with gold, the clear winning, having outperformed even silver. So bullion has been a good bet if that's your flavor. The currencies have been quite choppy, but have not been able to keep their footing against silver or gold. Volatility for the last 30 days has come in at 3.71%, which has pretty much stayed the same from the results we had last week. Same goes with the weekly chart, which is on your right. Volatility remains about the same, off by a couple of percentage points. It was 2.01%, it's 2.22%. So slightly rising volatility, but not anything you can measure. You can see on the chart on the right clearly that the Aussie has been the big loser, along with the New Zealand. So those two currencies are in the deep red for the last week. Canadian has only done well against the Aussie and the Kiwi, has lost ground against everybody else. The Swiss has also not been having a good time, but last week it did gain ground against the pound, the euro, the CAD, and Kiwi and Aussie. However, against dollar and yen and the bullion, it has not been able to get a foothold. Euro has been also middle of the pack for the last week, as has the pound, but again, I expect the pound to start pairing off some of its prior wins, as the market seems to have definitely turned on the UK right now. Yen has been having a pretty good, or had a pretty good week, gaining ground against everybody except the dollar. Kiwi, as we mentioned, along with the Aussie, just absolutely terrible. Dollar clear winner. Dollar outperformed everybody else this week that just ended. And bullion pretty much outperformed everyone except the US dollar and the Japanese yen. All the other currencies lost ground to both silver and gold. And that is where we are with the relative strength meter. The only thing we can take away from this is definitely keep an eye on the Aussie and the Kiwi, see if there is some good news coming out that may put them back into the recovery trend that they had been in until last week. And with the pound, be very careful as Brexit continues to weigh. Definitely the sentiment has shifted. There's a very little positive sentiment towards the pound right now, and this may be a key week to see that unfold a little bit further. Fundamental announcements, our calendar for the week of February 10th. We have only one fundie that we will be trading live, and that is the New Zealand interest rate decision, Reserve Bank of New Zealand interest rate decision on Tuesday at 3 p.m. Eastern time. So I will be opening up the Forex trading room around 2:30 p.m. my time, Eastern time, to trade that one live. I would not expect any sort of upset coming out of that fundamental, but as a matter of policy, I do trade every single interest rate decision that comes out there. When we do have some good movement out of one of these rate decisions, it tends to pay us back for all the others that did not move the needle. Other than the Kiwi interest rate decision, we have on Wednesday CPI coming out of the UK and the US. We have GDP on Thursday coming out of the Eurozone. And we have retail sales out of the US as well on that same Thursday. And on Friday, last but not least, the Michigan Consumer Sentiment Index out of the US. Again, I won't be trading any of these live. Other than that, the Reserve Bank of New Zealand interest rate decision on Tuesday, that will be, invite will be sent out in the email summary so everybody is aware of that session. And with that, we go into our analysis of the daily charts for the major pairs. The euro dollar in particular The euro lost a lot of ground against the dollar this week, which definitely helped us out. We had a long-running trade that had been as much as 200 pips negative for the better part of January. That trade is now at profit. Not a huge deal of profit. We're a little bit better than break-even point, but it has resumed its downward trend. And we're still looking for that one to continue towards the bottom of the chart and possibly clear the prior low, which would be our profit target. So that trade has come back to us. Pound dollar, as I mentioned, the pound has definitely turned on sentiment based on Brexit. It had a pretty nice drop, which we took full advantage of last week. You can see the red and blue arrows of where we got in and got out on that trade. So we pretty much captured the entire movement. And towards the end of the week, it did start trading flat, and we're waiting to see what it does as the week kicks off. But I would expect, everything being equal, that we are going to see the pound give up some of its gains in the following week or two. And this is now a pair of high interest in our trading. USDJPY, it's very hard to pick a direction on the USDJPY right now. It definitely got stronger against the dollar for quite a while, and quite strongly too, before it started reversing, and is sort of sideways right now with a little bit of bullish bias. But anyway, it could go in either direction, so I'll wait for the market to tell me what it is going to be doing before I trade this one. USD Canadian, this is another trade we were in and closed at profit sometime last week. It wasn't a huge profit, but it definitely moved the needle in our favor before the CAD ran into trouble and started losing ground against the dollar and every other currency out there. So we see that it did do a retracement back towards a prior level of support resistance. Also, the level of the Kumo, the Ichimoku cloud, served as resistance as well. And on Friday was already starting to head down again, but with a lot of uncertainty, as is normal for Fridays. All things being equal with this one, I would also expect it to continue heading down if oil prices continue to improve. Oil also had a bit of a choppy week, and it lost ground towards the end of the week, which of course is reflected in the behavior of this pair. But I do expect oil to have bottomed out and start slowly rising, and that will benefit all the CAD pairs, and in particular this one. So we'll keep an eye on it, and I'll look for another point another point where we can jump back into this trade and take a little bit more profit out of it. USD Swiss, we were still in that trade when this chart was taken. If you look at the charts for the market open, it went all the way past the prior high. So you will see a long spike of about 150 pips that did take us out at our stop loss. We weren't gapped out or anything like that. So it was an expected loss at this point based on the behavior of the pair. And we are going to get back into it on a short if there's nothing preventing that, any rationale to prevent that, cause or whatever happened seems to have been very temporary in nature, sort of like a dog shaking off fleas. So, well, we got shaken off, and we'll look to get back into that trade as well. Aussie dollar, nothing that has been said already on the daily. It's been sideways, though a rather wide 300 pip range, but still sideways since around August of last year. And it has now gone back to the bottom of that range on last week's dismal performance out of the Aussie. Kiwi dollar, similar, but not as bad. You can see that the Kiwi dollar, the Kiwi dollar is still much higher than its low back in September. So we can still see that retracement or reversal in the Kiwi. It is finding support at the Ichimoku cloud, and we'll be eagerly watching this week's performance to see if we're going to have a bounce or if it's going to return into a bearish pattern. Aussie CAD, this is one of those where the CAD did much better than any other CAD pair, as the Aussie also contributed by falling. So even though the CAD weakened, so did the Aussie. And this one is continuing to trade downward following that trend line. We're in this trade short already and carrying a little bit of profit, so no change there. And we are still looking to see it cross the Ichimoku cloud completely, get away from that cloud, and head towards a test of the prior low around the 0.91 price point, which is that thick red line at the bottom. So that's what we're looking for from that trade, and no change in our analysis there. Euro Swiss, this is another open trade, and this is one that did suffer on the market open. As I said, the Swiss pairs did go significantly up, so we got taken out of this one. Not with a huge loss, though. Either the stop loss had already adjusted itself, or it was tight to begin with. So it was pretty much a small loss, and we'll see if there's any opportunity to get back in. Whatever happened with the Swiss at the market open seems to have been very short-lived. Euro pound, we are long on this pair with the expectation of a continuing pound weakness, and we are carrying actually, this one was a break even, so we're neither losing nor winning on this one. It's within 10 pips of the entry. It had been carrying profit. As you can see, it crested and then dropped back down. All things being equal with this one as well, we would expect it to continue making its way up in zigs and zags. So no change on this one either. And we have a rather wide stop that is well below that low at the 86.25 or thereabouts at the bottom of your screens. I'm still looking for this one to cross the Ichimoku cloud on its way up, cross that trend line that is intersecting the channel, and make its way up to the 0.909, 0.91 up there at the top, and give us our exit at a decent level of profit. Euro JPY continues hanging out at the bottom of its channel, refusing to get back into the channel, refusing to drop out of the channel. So that is a no trade for the time being until a little bit more decisiveness comes out of this pair. Euro Canadian open trade, I think, yes, indeed, open trade. We took profit out of the EURCAD. Took profit when it retraced and hit our adjusted stop loss, and when it crested, we jumped back in. So these pips may end up being made twice. You can see that last entry is that red arrow at the very last candle. So that one was entered on Friday, and it is carrying profit, or was carrying profit last time we checked. And as for a target, we're still looking for it to make a test of the lows from September, and hopefully go even deeper. It's a rather steep trend line that it is following. It's sort of starting to flatten, but it is too soon to tell. As with all the other cat pairs, if we see oil prices improving, that is what's going to make these trades actually produce a lot of profit. There's nothing else right now that is capable of moving the CAD. However, the euro could weaken in and of itself, especially with Brexit. So those two factors are going to influence whether we take more profit out of this pair or not, and how soon that gets done. Pound JPY, I've been waiting to short this one until it shows a little bit more decisiveness. It's definitely crested, and all things being equal, as I like saying, if we continue seeing the Brexit impact on the pound, the yen should start benefiting from that against the pound and go down to at least the 135 area, which is a good 700 pips. So I've been keeping a close eye on this one, but as you can see, the last week or two have been reasonably flat and have really not given us a good entry. In particular, I'm going to be relying on the Ichimoku entries for this trade. I would like to see the Tenkan and the Kijun, that would be the red and blue lines you see on your screen, cross, so that the blue line is on top of the red line. That would be my entry on a short. Until that happens, I'm probably going to be a bystander. Aussie JPY, much like the Euro JPY, is trading at the bottom of a long-running channel. It is outside the channel, but has refused to get too far away from it, and recently was back inside the channel just last week. So this is another one that I would like it to either get in the channel or get out, but with decisiveness, so I can trade it in either direction. Euro New Zealand, and this pair has been the kindest to us this year. We've had multiple trades at profit on this pair last week. Unfortunately, we took a decent level of profit on one trade, and we got faked out on a reversal and lost the exact same amount. So on the Euro New Zealand, we were flat for the week. But for the year, we're significantly profitable on this pair. And we did enter it yet again. So currently we're short on this pair again and carrying a little bit of profit. I'm still looking for it to head towards a test of the prior low and preferably an extension so that it goes at least 150 to 200 pips below that low. And I'm willing to get in and out of these trades as many times as it takes for that to fulfill. On the daily chart itself, though, it did cross the trend line that it had been following. It's technically broken out. It's still finding resistance at the Ichimoku cloud. And that's where our stop losses and whatnot are set, so that the cloud is going to be our gatekeeper. So open trade, and we'll see what happens with that one this week. Pound Canadian, we took some profit out of this one and we entered it yet again. So we are short on this pair right now and carrying some profit. Again, I expect the CAD to do better with improving oil prices, and they are much improved from where they were at the end of last year, where it dropped to the 40s, and right now it's trading at the 50s. So at least the $10 delta in our direction on oil prices, which is going to be benefiting the CAD. At the same time, the pound should continue to see weakness out of Brexit. So this is probably going to be a very good pair to hang on to as Brexit plays out. But it did go back all the way to the top of the channel last week as the pound was very volatile. It did go in both directions. So though we took profit, it also went in the opposite direction without us in it, thankfully. And now we're back in short on this one, as I said, carrying some profit. It's getting very tricky to trade these pound pairs because despite the fact that common sense would indicate that the pound is getting weaker, sentiment is what's ruling the pound pairs. So if we see something happening in the UK that makes people's spirits go up, the pound gets stronger, even if only for a day. But it gets stronger to such a degree, that's the very definition of volatility, that it can blow past any stop or limit that you guys may have set or that I may have set. So trade these pound pairs very carefully until a firm direction gets established. Pound Swiss, and this one actually took us in a long direction on that spike earlier today. So we are carrying a losing trade on the Pound Swiss right now. I'm not going to close it. I'm going to let it play out and see what happens. It is hedged. We are in other Swiss pairs. We're trading them in the opposite direction. So worst case scenario, we'll be flat for the week on the Swiss. But in case this one does start heading up for whatever reason, we are in it right now. And that is the end of the charts for our analysis. Setups in progress that we see right now. So just more or less a summary of what I've been saying in the chart analysis. So the USD is shaky. A couple of weeks ago, the Fed outlook changed from bullish into bearish on the economy, and that is affecting market sentiment. So be careful with the dollar. It could go in either direction. The euro pairs continue to show fraying at the seams across multiple pairs, notably excepting the Aussie and the Kiwi, which had, the worst weeks ever last week. So every other pair seems to be going into euro weakness except those two. And if those do a turnaround, then those pairs are going to be coming back with a vengeance, the Euro Aussie and the Euro New Zealand. I don't trade the Euro Aussie, but I am very much into the Euro New Zealand, as I mentioned. So we're already short on that one, and we'll see where that takes us this week. The pound pairs. what can I say? The Brexit has finally caught up to both the UK and market sentiment, so they are starting to trend down across multiple pairs. But you're seeing those very sharp movements I warned about. So as sentiment shifts, they may go up 100 to 200 pips and then crash again. And it doesn't matter if you were right if you got stopped out. So trade these carefully, and remember that sentiment is not always rational, at least at first. Over time, it will go back to where it should be, but short term, you can get clobbered on these movements. Aussie New Zealand pairs, they had a great recovery for a few weeks, and then they ran into headwinds. Fundamentals out of both Aussie, Australia, and New Zealand were dovish, and that affected that recovery. So both of them sharply retraced, including our favorite pair of the year, the Euro New Zealand. We still booked a huge amount of profit so far this year on that pair, but last week, as I said, was flat as we took profit and we took loss almost at the same time. Last but not least, the CAD pairs. Oil price is the uncertainty that looms like a dark cloud over the CAD. Oil has been zigging and zagging up and down, and the CAD is following is following along as oil does this. And in some of the pairs, of course, they're being impacted by the counter currency, notably the USD CAD. We had the USD moving in both directions, putting this one into a bit of a roller coaster. And at the end, the CAD lost ground against the dollar. Also, as I said, pretty good opportunity for oil to continue improving and us to get back into some of these CAD pairs where we had already taken profit. So we took no losses on the CAD. We took a lot of profit before it started retracing, and let's see if we can do that again. And last but not least, we are moving into a very interesting period where these long-term movements that may define the year are starting. So it's time to start looking for those longer-term entries as several of the geopolitical events that we've been following are nearing their conclusions. We've got Brexit. We've got the trade war between the US and China. We've got a bunch of other stuff that is just getting to the point where some sort of decision or outcome has to happen. And that will define which way the market goes for months, if not for the remainder of the year. So be patient, wait for these things to play out. And as soon as we see those trends starting, we have to catch them and ride them for as long as they're going to go. You have to have the patience both to wait for them to happen and then the patience to stay in them until they run their course. And the trend is your friend until the bend. You've all heard that before. So trend following is usually going to be your best bet, but remember that all trends end at some point. So don't forget to get out before that point or get out as soon as you see it turning, while at the same time, and it's a balancing act, having the patience to let them run their course. So that is going to be it for me today on our start of the week. If anybody has any comments or questions, do feel free to unmute yourselves at this point and ask. Going once, going twice. Okay, then if nobody has anything, thank you so much. I will be putting out a summary by email later tonight, as well as the recording of this session for anybody who missed it. And I look forward to seeing you again tomorrow in our regular 8 p.m. session. Thanks a lot and have a great trading week.